What's up, guys? Thanks for tuning in here. Hey, before we get started, throw us a comment. Tell us, where are you watching from? We're just curious if you guys are here local, if you've been watching the local Boise market with us, or are you from another state and you're watching the Boise market, or what's going on in your market? Today is an exciting day. We have seen interest rates drop below 6% by a local credit union. So we're going to dive into that, but we're not going there yet. We're also, so before we get into that, make sure you like this video. Again, send us, share a comment where you're watching from. So we're going to look at interest rates. What are interest rates doing? Local credit union here shows their interest rates. We're also going to look at some builders. What have builders been doing over the last month and a half? We're going to show you, kind of go into some stats on, okay, what they're asking this, but what are they really doing? We're going to also jump into an article by Yahoo. And so, anyways, I'm super excited for this one. There's a lot of stuff to share with you guys, but we saw. So before that, Abraham, hey, welcome from Meridian. I'm glad you're watching here. So, okay, let's just we're gonna just jump right into what Idaho Central Credit Union, their local credit union, what they're showing their interest rates are today. So we saw the inflation report come out yesterday. It was a lot better than people were expecting, and so we've seen two interest rate price improvements. Right now, ICCU is showing for a purchase at 5.875. Now that's big because for the last little bit we've been sitting around 6.375, 6.5% here in the valley. But now ICCU is showing out. Now some mortgage brokers are probably going to be a little bit higher than this because what we've seen is ICCU, as well as one of the lenders that we work with, they are the most competitive with purchase rates. But ICCU, but other mortgage brokers, they typically are a little bit higher than that. So, and again, if you're just tuning in, please give us a like. Let us know where you're watching from. Let us know if you're watching a certain real estate market with us. So right now we're sitting around that 5.875 with ICCU, but what we were looking at about just a year ago, according to Freddie Mac, we were sitting at around 3.5%. So we're still about 2%, 2.25% higher than that. But so there's still definitely affordability not there, especially, if you guys saw our market update video, which we just posted a couple of days ago, we showed you how for resale houses, our median sales price for resale is down to $490. So there's been a great improvement as far as home prices are going, but we still have a long ways to go. And how I just want to show you that. I just want to show you what that looks like. And Better Call Saul, should you buy a house? That's a great question. We would have to maybe go into a little bit further detail what your situation is about buying a house or not. It all kind of depends on your circumstances. If you're looking at buying an investment, I would probably say it's not the best time to buy an investment. You just look at the return that you're going to get, right? Rents are dropping. You guys probably saw a video from that, but rents are dropping. And so if you were to buy a house and turn on and try to rent it, you're probably going to be negative cash flow. And so right now, as far as investment properties go, we've been kind of stepping back from moving forward on investment properties. Now, primary homes, that's again, that would be, that's a good question. Primary home, we have helped some clients that are relocating here buy a primary house. They were able to get a lot of seller concessions. One client specifically got over 20 grand in seller concessions. So they brought their interest rate down below 5%, which is huge, right? Because the interest rate is what's driving our affordability, because we've had low interest rates. And we're going to get into that. We're going to go through a mortgage calculator, show you the difference of these interest rates. So again, it just kind of depends on your personal circumstance. Better Call Saul. So let's jump into this mortgage calculator. What I want to just show you guys here. So median sales price for resale homes is $490. And so with $490, if the interest rate so the interest rate was last week 6.5%. So I just want to show you what 6.5% looks like. We're assuming property taxes are 3,000, assuming interest, mortgage insurance, homeowners insurance is $1,000 a month. So what this doesn't calculate is your mortgage insurance. So if you put anything less than 20% down, you're going to have mortgage insurance. And if you buy with an FHA loan product, then you're going to have mortgage insurance for the life of the loan. So that does not include this. Side note, if you buy with, if you're a veteran and you use a VA loan, you don't have mortgage insurance. So just with assuming you put 20% down, assuming that you have 80% equity and your loan amount is $490 on a 30-year loan at 6.5%, your mortgage payment is $3,430. Now the difference between the 5.875 and this is about $200. Now see here, we'll change the interest rate to 5.875. And hold on, let me hit enter. Okay, the mortgage dropped $200 a month. So that was a savings of $200 a month. But remember, this same time last year, we got 3.5%. So if you were to buy this same house last year at this same time, and you had a 3.5% interest rate, then your payment would look like this. Hold on. 3.5% interest rate, you save $700. So again, interest rates are what's driving the Boise market affordability down. And so we still have a long ways for home affordability to get there. But what do you think? What do you guys think is going to happen with the interest rate? Throw it in the comment. We'd like to hear from you on that. But while we wait for you guys to comment on that, let's go into some builders, what they're doing. Before we get into those builders, I just want to bring up Open Door. Open Door is an iBuyer that came into our market. And so I had to share a couple things with you. So if you guys have been following our channel, you've been following us for a while, you heard me say in a couple videos back that we tried to throw in a lowball offer at Open Door, knowing that they had a lot of inventory that they still had to move. Now, when we threw that lowball offer, they only came down from their last listed price about $5,000. That's all they were willing to negotiate. Well, I was going through the MLS doing some research for the video that we're doing next week. So if you haven't subscribed, make sure you subscribe and hit that notification bell so you can follow that video. But what we found is Open Door is now willing to negotiate on their price. So what does that look like? So they sold 12 homes between December 1st and now. And out of those 12 homes, there's 3 homes that sold for double digits less than the last listed price. What do I mean by that? So there's 3 homes that sold 10%, 11%, and 15% under their last listed price. So when you're going into it, you got to make sure that you are willing to negotiate with Open Door. They are willing to negotiate now. So don't go in there offering full price. Go in there with the mindset of, I'm going to negotiate and try to bring this price down. Out of eight of those 12 homes, they were sold for 6 to 7, almost 8% under the last listed price. So they're willing to negotiate. So that's about 11 homes that they are willing to negotiate and come down. And so make sure if you're out there shopping, if the interest rate starting to drop is going to get you off the sidelines because maybe it's more affordable for you, make sure you just do your homework. If you're not using us as a real estate agent, ask your agent, okay, what are the homes that this particular seller has sold over the last couple months? What are they doing with their home prices? Are they dropping them? Are they staying still? And then from that, then you can structure it. Now we did have a couple of subscribers reach out to us and say, hey, I'm getting ready to make an offer on this particular house with this builder. Unfortunately, because they were being represented by another agent, we cannot give them advice for that single home. But we're happy to give you a generality thing so you know what to do. Now, obviously, we'd love if you used us, but if you don't, just have your agent do that kind of homework that we like to do. All right, so after Open Door, we're going to go ahead and jump into this next builder. This next builder is Toll Brothers. Now, Toll Brothers, this is insane. So they're doing a new year, new home sales event. Now, if we look at these prices, you'll see here in Nampa that they slash some of these prices $100,000. Now that doesn't even include the incentive that they're giving. So right now their incentive is we'll buy down your interest rate 2% or throw in a free RV garage if you build with us or buy one of our spec homes. That's huge savings. And so This is only going on until the end of January, as long as you close by the end of February. So that is a massive savings to a home buyer who's looking at buying, and you're willing to and you're willing to go and you're willing to buy a Toll Brothers house. So they make it kind of a semi-custom. You can build with them. It takes about 10 months, or you can go and buy a spec home. But the thing I want to bring up about this, so out of the 16 homes that they sold between December 1st and now, they had 2 of those homes sold for 0% under list price. The rest of them were sold under list price. Those 2 homes that were sold for right at list price, they were being represented by the builder's agent. I bring that up because it's so important that if you're going to go buy a new construction house, do not just use the builder's agent, right? What we see here, out of 16 homes, every single one of them but 2 were sold under the list price because those agents went in and negotiated. Sorry, correction. Only 3 of those were sold at list price. The rest were sold for under list price. But you got to keep in mind that these builders agents, they're being paid by the builder. Some of these builders are getting a salary from the builder and not working on commissions, but they get bonuses if they sell you, and they're not going to tell you, hey, this builder's willing to drop this much price, or hey, you should come in at 10% under or 5% under. So keep that in mind as you're looking at new construction homes, if that's something you're going to do. All right, let's jump in the next builder. Oh, hold on. That's I think interest rates won't drop too dramatic because it can damage the economy. I don't think asking prices will drop much more due to comps. I believe concessions are there. Absolutely, Mr. Why you're bugging. Sorry, I'm not a good reader. But yes, I agree. Interest rates shouldn't come down anymore. I think if interest rates come down, we're going to have a huge inflationary market again. And the Fed is really trying to stop that. We did see a couple rallies. I do think home prices are going to drop. We've seen a handful of new vacant homes get on the market, but there are also some people that are on the sidelines that are getting off. So I think it's going to be a mix that we're going to see this year. And concessions are definitely a new direction, especially when it's coming from builders or other people. So thanks for commenting. And while I'm at it, just want to remind you, if you haven't yet, we'd love if you subscribed and give us a like. So let's jump in this article from Yahoo before we get into the next builder. So this article from Yahoo, U.S. real estate market is in big trouble, experts warn. They're going on and they're saying that, and KB is a home builder we're going to go into. One of the nation's largest home builders, KB Homes, which we're going to look at here in a second, released their Q4 report Wednesday and indicate more signs of a housing market weakness. And according to the report, KB Homes saw a 68% cancellation rate on new construction. This is crazy. This is that's massive amount of cancellation contracts. So much so that the KB agent here in the Valley, I talked to him. They haven't sold anything between December 1st and now. And he's like, just bring your clients here and we will make a deal. We'll try to make a deal. Our builder wants to get this inventory gone that's just sitting. So again, KB, national builder, they're seeing things nationwide, but they're also seeing things here in the Boise area, and we want to pay attention to that. KB Homes, again, they're willing to negotiate. But before, I'm going to jump into Tristan's question. He said, do you think now is a good time to sell a home, or should I wait until summer? So Tristan, here's the thing. We saw back in May until now, we saw a decrease in home values. Some areas we saw up to 20%. Waiting can create a problem. Now this is assuming the market continues in the downward trend. We don't have a crystal ball. Full disclosure, I don't have a crystal ball. I can't see the future. If the trends continue how they have been, then I think you could potentially lose more equity if you wait until summer. But I can't make that decision. You got to make that decision. When is it right for you? But if trends continue, then you could lose more equity. Like people who tried to sell back in May, held high, and then now they're chasing, like Open Door, almost every single one of their listings. They stayed too high. Now they're willing to negotiate and drop. Where the opposite we saw with builders who were here back in the 07 crash, they knew right away, okay, boom, I'm cutting my prices. 50,000, 100,000, because they knew they didn't want to chase a falling knife. They didn't want to be the inventory stuck on the market. So that's going to be ultimately the question, would be, what is your circumstances and all that kind of stuff. And yeah, so that's all I'll say on that, Tristan. Okay, so KB Homes. So here, KB Homes. Sorry, we're jumping into Lennar Homes. Lennar has, excuse me, Lennar has 7 active homes, but they've sold 5 from December 1 until now. Now, Lennar, their average price reduction was about 2 to 3%. So that's how much they dropped down. But what they're showing on their website is some homes will qualify up to a $60,000 price reduction. Now, this is on select homes. There's going to be circumstances, right? You have to close before the end of February. You have to get into contract between January 1st and January 31st. So again, these builders are wanting to move their inventory. And so with these interest rates changing, if it gets you off the sidelines, you just need to make sure you do your homework and see what incentives are being held. All right, let's jump into the next one here. Okay, hold on. Before we get there, Tristan, I want to answer your question. Do you think interest rates will increase or decrease over the next 6 months? Yeah, again, the crystal ball question. I don't know. We did a video, Tristan, that was the 2023 forecast. On that 2023 forecast, we mentioned how in the Fed meeting minutes back in December, 17 of the 19 people on the board said that they plan to hold the Fed fund rate above 5%. Now, investors are thinking maybe there's going to be a Fed pivot, and which is why we saw a rally in the stock market, why we're seeing this improvement in interest rates, because they're basing their interest rates off of what the Fed is doing and how that's working. I think if they stay true, then interest rates are going to increase again. We'll find out here in February when they announce their next rate hike, or if they're going to level off, and we'll be able to kind of listen to see what they're doing. But if they stay true to what they said back in the December meeting minutes, then we could see interest rates come right back up to 6.5%, 7%. But I also want to throw in this caveat. Jerome Powell has pivoted before. So he has said he's going to go one way, and then he completely pivoted. So he has done that in the past. So we can't overlook that he could completely do a U-turn and do something different this time. Stop moving. Big Jeep. All right, thanks. Yeah, I saw that comment. Sorry, I just like to talk with my hands. I can't just sit them in my lap. I appreciate you commenting that. I'll do my best, Big Jeep. Okay, so let's move on to this next builder, and I'll try to glue my hands down to the table, Big Jeep. Thanks. Okay, so we're gonna look at this next builder, Brighton. So Brighton is they're a builder and developer. So they do commercial development, they do residential development, and then they also build houses. Right now, they have about 26 homes that are active. Now they build communities like a 55 and older communities. They build single family community. So they kind of build a handful of different kinds. Anyways, so they have 26 active homes, and they've sold 6 homes between December 1st and now. And out of those 6 homes, they average about 5% under the list price. So again, if you're looking at a Brighton home, which they build a really nice house, be prepared to try to negotiate on that. Again, average 5%. So somewhere at 7, 6, 1. And Big Jeep, I'm just telling you, it is really hard not to talk, move my hands. I'm so used to it. So I'm trying really hard for you. So anyway, so Brighton Homes, again, look at them. Now, something that's interesting, they have 26 active listings, but thanks to Landpro DATA, they pulled the reports, and they have about 80 active permits pulled. So some of those are going to be custom, semi-custom builds. The others are what they're selling. So just keep that in mind. Now, I think we have one other thing that we're going to be jumping into real quick. But before we get into that, I just want to, again, ask you guys if you could hit that like button. If you haven't subscribed, And if you want to follow our content, make sure you also hit that notification bell. We've had a handful of subscribers say, hey, we don't see your new videos. All right. New comment. My biggest problem with new builds is the yard size. The majority of them are tiny. Yes, I agree. That is a hard thing. My wife and I, we live on a half acre, so totally get that. That's hard. There are some developments out there that are half acre, but I think it's going to be a while before they get brought down into more affordability. The other thing about new builds that some people don't think about is trees are typically going to be small. You're not going to have a mature tree in your front yard, unless it was already on the land before they developed the property and they saved it. And you have expenses right out of the gate, right? You got to put blinds in, you got to put fridges in, but we have been able to get builders to throw that in just to get their inventory moved. So that's another thing to keep in mind. Thanks for that comment. JB, tell people not to buy in Florida so locals can actually buy. Yeah, I know. Looks like JB, you're in service. So thanks for your service. Thanks for your comment. We really appreciate that. Come from a family of military, so we really appreciate your service. Thanks on that. All right, so we're getting into the next thing. So here's what KB, we kind of jumped around. KB is willing to do a 7.6 adjustable rate mortgage. Now, I just want to get on here and I just want to warn my audience about adjustable rate mortgages. Remember, back in the crash, people were buying with adjustable rate mortgages. And for you who don't know what adjustable rate mortgage, I'm going to give you a brief overview, but obviously you're going to want to talk to a lender for a more in-depth thing. Adjustable rate mortgage. So let's just talk about a set 5-1 arm. So your rate's going to be locked in for 5 years. And then after that 5 years, it can adjust. So if interest rates continue to rise, then the adjustment will rise and your payment will change based off that interest rate. Now, what happened back in 2006, 2007 is people had these loans, these adjustable rate mortgages. They got locked in at a lower interest rate because they're very enticing right now, right? A 5% loan, interest rate on a loan is very enticing. But then if the interest rates increase at the end of the 5 years, then you're going to be stuck with a higher payment, and that's going to you're going to get kind of caught in trouble, especially if you maxed out your payment there. So just be very careful of these new programs that these lenders are pushing out. The 5-1 arms, they have like a 2-1 buy down where for the first year you have a less interest rate. Then the next year it increases a little bit, and then the next year it increases even more. People getting stuck in those if they aren't preparing or they aren't financially, if you can't be financially wise, then you could get in trouble every time that payment increases. And plus, we don't know what's going on with our job market, right? Right now, Micron, one of our employers, is laying off 10%. If you guys follow our videos, residential development is slowing down substantially. Commercial development is still cooking hot, but I think that we'll see that slow down here in a little bit. So thanks for tuning in, guys. We really appreciate your support. If you haven't yet, please hit that like button, subscribe, and notify.
Yeah, I just want to come on here too, guys. I'm the one that edits the videos. We're trying our hardest to make this live right. This is kind of like a rough draft. So we appreciate you guys being here. Give us feedback on it. We're going to do some more camera stuff and audio to make it a little better. But we're sharing like 3 different screens. So I'm running the screen. So sorry if he's jumping all over the place. And Josh is working on his hand there for you, Big Jeep. So yeah. And Dad, I appreciate saw your comment on there. Thanks for sharing our content. And let you finish up.
All right, guys. Well, hey, we'll see you next time. If you haven't, please check out our videos. If you like them, share them with the people you know who might need it. Thanks. See you next time.